Okay, all right, folks, let's go right ahead. Well, first of all, I want to apologize for the technical issues and cancel this webinar on last Thursday. There's a reason why we rescheduled this. I had some technical problems and I just lost connection and I couldn't re-log into the room, and there was nothing I could do about it. So I'm really sorry. Let's go ahead. Since we rescheduled it today, I do hope most of you people have made it to the webinar. All right, this is the fifth in our series of using indicators correctly. Let me start off by the same thing that we've been looking at, that first and foremost, all indicators are lagging. So if you must use indicators, generally I really do not use indicators at all. Maybe just one odd indicator that I look for some setups. But if you must use indicators, then you must learn to use them correctly. Look at each indicator, look at the characteristic of an indicator, and look at situations where the indicator is going to give you the best possible inferences. Now, all indicators are built or are calculated on price. So whenever price changes trend, it subsequently leads to the change to the indicator. So you really do not expect an indicator to give you a leading edge about price. Most traders really do not think about this, and I really would say that it's not their fault, because when you start, it was like when I started about 10, 12 years back, everybody talks about indicators. Nobody talks about the correct way of using indicators. So you have use this indicator, use a signal line crossover, use a moving average crossover. That's the best way to do. It's like people want to have some kind of a confirmation. It can give you confirmations. Now, the series that we have gone over, we've had to look at Bollinger Bands, at the Stochastics, at the MACD, and the moving averages also as the best way to use them. Now, the moving averages, let's take a case and example of the moving averages. They are, if used in the conventional way, like all indicators, like most of the traders tend to use the moving averages on taking an entry on a moving average crossover, using a combination of two moving averages. They are one of the most lagging indicators. And if you base your trading on that particular system, you are going to get into serious trouble, because you will get into the trade when more than half of the move has already finished. So there are ways. What we looked at was we tried to use the indicators in a different way so that it gives us a leading edge. Right? All right. Now, let's have a look today at the ADX. Now, I want to show you, because this is a good indicator to use if you know how to use it correctly. At the same time, I also want to show you the lagging part of an indicator. Because being an indicator, it has to be lagging. So how do you take that into account? What is the best way of using it? Right, now, we have this indicator over here. I've plotted this ADX, which is this dark green line, and below that you have the DMI. Now, the ADX is a combination, or it is a combined indicator with the DMI, which is a directional momentum indicator, and the ADX is the average directional index, or you can call it. This was developed by Wells Wilder, and it can be really good if used properly. First, let's just concentrate on the ADX. We'll come back to the DMI lines subsequently. Now, the ADX, the characteristic of the ADX is very simply, when an ADX is, or the reading of the ADX is somewhere around 20, it means that an expected trend is supposed to start from here. So first and foremost use of the ADX is that if it is close to 20, it is expected to start moving out from the oversold area of 20. That's one. And if it's expected to move out, it means that a trend is expected to start. So, of course, alternatively, if your ADX is in the overbought area, it's overstretched very high, it means that the trend is about to finish. It means that the trend has stretched itself and you are looking for a pullback or a retracement. Now, one very important point about the ADX is it does not give you the direction of the trend. Now, whether price is in an uptrend or whether price is in a downtrend, your ADX in both ways is going to give you the beginning of a trend, but not when price is going to go up or when price is going to go down. Let's have a look at this situation. As you can see, right, you can see my cursor over here. You have this ADX come down to, I've plotted a line of 20 over here. So the ADX come down to 20. Now, when it's at 20 and it starts rising from here, it means that the trend is above. But here you can see that you have a downtrend. Right? So don't get confused about this. A lot of traders get confused about the fact that if the ADX has started moving up, you would expect price to move up. No. Your ADX gives you the beginning of a trend, whether it's an uptrend or whether it's a downtrend. So that you have to use something else to tell you whether price is getting into an uptrend or price is getting into a downtrend. Now, this is a basic area of confusion for a lot of traders. But that said, the ADX is a very good timing indicator. So one of the best ways of using ADX is if you're taking a trade on whatever system you have. Let's say you're taking a trade on maybe a divergence. Let's say you're taking a trade on a break of a trend line. Let's plot a trend line over here, right? I would plot this trend line over here. And this would be a place where I would say, okay, price has started changing trend and I should start getting into an uptrend right now. Now, if you start getting into an uptrend, you can use the ADX as a timing indicator right over here. When price starts breaking or has broken the trend line, starts moving up, you look at the ADX, you see that the ADX is still moving down. So you would ideally want to take a trend when the ADX rises above 20. It moves below this 20 line, starts moving above. Now, if you look at this, this is the point of the lagging indicator. If you look at this, this is where, let's just zoom it a little inside. When did the ADX start coming out of the 20? It went below and started coming out of the 20 right over here. And what happened over here? Your uptrend has finished and price starts moving down. So when you're using an indicator, obviously it's lagging. So this is also giving you a lagging use of an indicator. Right? So this is one of the disadvantages of using any indicator, but an ADX can be used, as I said, as a timing indicator. Let's take the current situation. What we do have is right now the USD CAD, we are looking at the Canadian dollar on the 1 hour time frame. We have the ADX moving out of 20, which means that there is a strong trend. Now, looking at this, if you're looking at the beginning of a trend and you have the ADX moving out, you know that there is still some movement left in the trend. So you would have to remain in the trend. You would not try to go against the trend. Maybe if you're looking at a stochastic, maybe if you're looking at a MACD. I'm sure if you look at any other indicator, let's just plot one and have a look. This would show as overstretched. And a lot of traders tend to use the fact that if this is overstretched, if this is in the overbought area, that means price is expected to change trend. You're expected to move down. But here your ADX is telling you that the ADX has just started moving up from the 20 region and started moving up. So you should ideally remain long. And let's have a look at some standard indicators. Let's have a look at maybe the MACD. Let's have a look at the MACD. Right? What you have on the MACD is your histograms are pretty much overstretched, and it's here. Let's also have a look at the stochastics. The general stochastic tend to use the stochastic oscillator more than the stochastic indicator. Right? On the stochastic oscillator, what can you see over here? You can see that your stochastic has gone back into the overbought area, which ideally would mean that price, as per the conclusions, that price has started or is expected to move down. But looking at the ADX, just by the ADX, you would not go short. Bullish pips, I have just plotted the stochastics right now. I had plotted the MACD, which I removed it because I wanted to show it more on the stochastics. because it's a better oscillator. So based on the conclusions, a trader would say that a trader would say that right now your stochastics have gone back in the overbought area, so which means that price is expected to move down. So a lot of traders would tend to start thinking short. But if you look at the ADX right now, your ADX tells you that it just started moving up. So one of the best ways of using the ADX, just the ADX, is use it as a timing indicator. That when the ADX has started moving from below 20 starts going up, that means your trend is expected to continue. Now, as an example, you saw it really doesn't work all of the times. Right? So you have to be very careful. Now, taking that into consideration, your ADX should ideally be used along with the DMIs. Now, let's have a look at the DMIs first. So let's remove the stochastics. Right? And let's zoom inside and have a look at the DMI. Now, if you can see the screen, we'll take the same trade example where we use the ADX to get into a trade. Let me plot this over here. The place where we said that we would get into the trade. Right? Let's trade the hard right edge of the chart. We trade the hard right edge of the chart, and this is where the ADX starts coming out. So is there anything else? Is there some other filter which tells us that maybe this could work, this could not work? This is where using the DMIs along with or in conjunction with your ADX will really help. Now first let's have a look at the DMI. The DMI consists of two lines. You have this red dotted line and you have the blue dotted line. Simply put, if your blue dotted line is above the red dotted line, it means that price is in an uptrend. And if your red dotted line is above the dotted line, it means the price is in a downtrend. That's one of the simplest ways. Right, let's just have a look at some examples. For the time being, don't look at the ADX. We'll just concentrate on these two blue and red dotted lines. Right now, in this case, you had price in a pretty nice downtrend. So you had the red dotted line above the blue dotted line. Now, use it in combination with the red and the blue lines. Compare both of them. Do not look at the fact that the red has a reading of say 36 or the red has a reading of above 0, it's got a reading of 20. It doesn't really matter. What matters is the combination of the blue and red dotted line. If the red dotted line is above, that means price is in a downtrend. If the blue dotted line is above, as in this case over here, it means price is in an uptrend. That's the simplest way of using it. Now, a change of trend can be determined early on the DMI when you have a crossover of these lines. And it doesn't matter in which area these lines cross over. I mean, they could cross over close to your mid levels. They could cross over even below. They usually, because prices, the lines stretch towards the outside, so they usually cross over in the middle area, but it really doesn't matter. Yes, the plus DMI is the blue line, the minus DMI is the red line. So when you have the blue plus DMI line crossing below the red line, or you can say that the red line starts moving up, it means that price has gone into a downtrend. Now, once again, let me demonstrate the lag of all the indicators. Here in this case, let's have a look at this. When did we realize if you follow candlesticks? This was a very nice candlestick pattern. Maybe the next bar would have told you that price is going. When did you see the DMI lines cross over here? So by the time the DMI lines crossed over, price has already moved quite a bit and then goes into a consolidation. And as you can see, both these lines, when both the blue and the red DMI lines are together, they are kind of range bound together. That means price is pretty much range bound. It's only when your red line starts moving away or moves beyond above the blue line that you can say that your downtrend has started. Right, so once again, it's lagging, but this is the case with all indicators. What we are trying to do over here is try to put up a system where we can effectively take out some part of the lag. You really can't take out all the lag in the indicator, but at least some part of the lag. So what we do is we will use a combination of the ADX and the DMI. Now let's go back to the ADX. When we come across a situation where your ADX starts rising from 20, you look at the blue and the red DMI lines, the plus and the minus. If your red DMI line over here, as in this case, is above the blue DMI line, it means price is in a downtrend. So you have two conclusions here. One, that you have an existing downtrend. Secondly, your ADX has started moving out from here, which means your downtrend is expected to start, or a trend still has some place to go till the ADX starts or moves towards the overbought area. It stretches to the outside. So here you have two things which are telling you. You have the direction and you have the expected time when price is going to go, or you have an expected move. Now coming back to the lagging part of it. There are cases, let's have a look at this, what we saw over here. We look at the price break of a trend line, which I always say that price action is much more effective, and it gives you a faster conclusion than any indicator ever will. So here we concluded that based on a break of a trend line that we should start going long, maybe look for it. Your ADX was still on its way down. As you can see, the ADX was down. When it started moving up, your ADX, your price stopped. Now, when your ADX started moving up and price is in an uptrend, let's have a look at this. This is the place, right? This is the place where your ADX starts going up. Where is your DMI lines? Your DMI lines, of course, your blue is above, so it tells you that yes, there is an uptrend. So you would, let's zoom it a little more and trade the hard right edge of the chart. Right? This is where you are. Your ADX has started moving out. Your plus blue DMI line is above, so it's a good uptrend. Now, you don't know what the next bar is going to be. You have no idea. And you would probably go long based on this. And what happens? Boom, price goes down. Probably if you had plus, you would have got stopped out. So is there something which will tell us that, okay, this is something that we need to know, that price or this ADX or the DMIs will give us an indication? Well, there is one thing that you can use on the DMIs is you look for a crossover of the ADX with the DMI. Or you have a look at the crossover, or not the crossover, you have a look at the ADX going above or below the DMIs. Let's take this example itself. When we started to get into a trend over here, right? This is the place. Now, once your ADX starts or it crosses the blue DMI line, it is supposed to indicate that yes, your trend is pretty much strong. But what are you looking at is your DMI lines are moving down. This gives you kind of a heads up, a warning, that if your DMI blue line is moving down and your red line has started moving up, your red DMI line has started moving up, we think that, okay, there's something wrong over here. And what happens is price comes here and you have this. So ideally what you should look for is you should look for your ADX starting to move above the DMI lines. That gives you a stronger indication of a trend. Let's take this example. Now I would start looking at this when my ADX crosses the DMI to the outside. I have a look at the opposite DMI line. Let me put a line over here, right? This one. And let's take this. At this stage, my ADX, of course, has started moving up. I have been short on this because my red line is above. I would probably take a trade, but I need some confirmation. Red line moves up. Your ADX crosses the red line. Now, when your ADX crosses the red line, there are two indications for this. One is that once your ADX crosses the DMI lines, it could either change trend or it could continue trend. So what is it that's going to tell us? You look at the opposite line. Your red line indicates, red dotted line indicates an uptrend, a downtrend, my mistake. You look at the blue DMI line. If it is still continuing to the downside, you can see over here, your blue DMI line is still going down. You know that there is an existing trend still going. And then you ride the trend. You follow the ADX till the time your ADX goes stretched, overstretched, and starts moving down. So your trend will come to an end when your ADX moves to the overbought area and starts moving down. Taking the same example over here, once your ADX crosses the blue DMI line, your red line starts moving up, which tells you there's something wrong. In this case, if your red line was continuing to move towards the downside, you would have probably got into the trend. No, there is no reading for this. Remember your overstretched area. I'll zoom out of the charts. Right? Now, this here is 72. If you see, this reading is 72. And if you go over here, this reading is 60. So there is no value. Again, I repeat the same thing what I mentioned earlier, that there is no value when you look at the DMI and the ADX. The only value is this 20, that when price starts moving out of the 20, your overstretched overbought area can be determined when price reaches the end of the window. So do not look at the value. There might be a time, if you look at this, even on a 53, right over here, it's still overstretched. Right? So price may, here you do have overstretched and price of change of trend. So there is really no numerical value here. It's only when your ADX stretches to the end of the window it's considered to be overbought. Once again, the only value that you look at is the 20. Rest of the values you don't really look at. So we are looking at two things. Let's repeat this. Once again, let me repeat the same thing. That all indicators are lagging with the ADX and the DMI. Also your indicators are lagging. But we use a combination to kind of reduce the lag. So one is that once your ADX starts moving above 20, it indicates the beginning of a trend. If the ADX crosses the DMI line, when you're looking at a trend, you look at your plus and minus DMI. If your plus DMI line, the blue DMI line is above, it means it's an uptrend. And if your ADX crosses the DMI line, you have a look at the opposite DMI line. Now, let's have a look at this situation. You have the ADX moving up. You have the blue DMI line starting to move down. Now, let's say what happens is this blue DMI line starts coming down and the ADX crosses it. What is the conclusion that you can draw from this? You look at the red DMI line. If your red DMI line still continues to the downside, that means your trend is expected to continue. If your red DMI line starts moving up, it means your trend is about to end. And even though the ADX is up, it means that it is going overstretched. I'm using the word overstretched, not overbought, and it could turn. Now again, this is just based on experience. I have used the DMI and minus DMI. So if at all, my reason for going over all the indicators over here is every trader is familiar with some kind of an indicator. If you happen to use the ADX and the DMI, this would be the best possible way to use it. If you're not using it, well, good enough. I would not really recommend that you use any indicator. It's really not advisable. But you can use the ADX as a timing to get into a trend, which is very, very important. All right. Again, we looked at situations where there was a lag. And remember one thing, that all your indicators are still lagging. They are all lagging. So if you use an indicator, you must use it in conjunction with price action. Absolutely bullish. The 20 line applies to all time frames. All time frames. This is the standard thing. If your ADX starts moving above 20, Now, if you look at some of the material available for the ADX, some traders even look at a move above 30, maybe even 35. But I say that once it starts moving above 20, it tells you an indication that yes, a trend is underway, one. And secondly, you use conjunction with the plus and the red plus and the minus DMI lines. When ADX crosses blue over here, you have a look at the red DMI line. If your red DMI line is still continuing down, it means that your existing uptrend is still in place. When the ADX crosses the blue line, if your red ADX has started moving up, it means that price is going into a downtrend. Right? Remember, if your red ADX starts moving up, that means price, your red is expected to move up, which means that your downtrend is expected to stop. So your opposite line is much, much more important than the current line, the trend line that you're looking at. Exactly, that's exactly what I said. Most people use the 30 line. I prefer using the 20 line because it gives you an early indication. And remember one thing, you have to use it in conjunction with the DMI lines. So, here's an example. Right over here, we looked at the ADX moving above 20. Right? And it still went down, still moved up. If I was using the 30 line, let's say the 30 line is somewhere over here, and this is the place I would have said that, okay, we are looking at expected, but what we looked at, let's have a look at the situation and why I tend to use the 20 line. Because if I'm using an indicator, it has to give me an edge. Price starts moving above 20. My blue ADX line is above, which means it's an uptrend. Now, when the ADX crosses the blue line, my red line, if you can see, is still continuing to the downside, which means my blue line should also continue to the upside, which means an expected uptrend is in place. Now, here, once again, price, all indicators don't really work all the time. And so you have price going into a range. But when you're trading the hard right edge of the chart, using the ADX from the value of 20 in conjunction with the plus minus DMI lines makes a lot of difference. Now, let me clarify once more. I keep repeating this again and again. I do not recommend using indicators in isolation. You always should ideally use price action. A break of a trend line, break of simple levels of support resistance are much, much more important than any indicator. Let's take this example. If I plot a trend line over here, this break of a trend line is telling me that there is an expected move of trend. And if I use simple zones of support resistance, if I see that price has bounced off this previous resistance turn support, there is a very strong probability of price moving up. This is when I know the price starts moving up. I can use the conjunctions over here, knowing that, okay, only when the ADX starts moving above that your trend is expected to start. Always use price action. Please, folks, do not ever use any indicator in isolation. Now, this is a kind of a complicated indicator. It's not very easy to use, but I thought it was worth covering because it has its advantages. So if you do use it properly. I think this probably completes our use of indicators. We've got stochastics, the Bollinger Bands, the MACD, the moving averages, the ADX, the RSI. These are standard indicators. So next session onwards, we'll go to some other topics. This is where we complete our series on using the indicators correctly. Yes, it does, exactly. When the ADX is overstretched and starts turning back, it means, it doesn't exactly mean a trend reversal. It means a loss of momentum. Your ADX can move back again, pull back and still go up. But if you're trading, it's wise to take profits at that time when the ADX starts turning down, because your momentum has kind of run out. Yes, absolutely. Yes, bullish pips. I mean, this is one of the ways of using the ADX correct. When price is range bound, you should always look at the ADX to see that whether the ADX starts moving out, or that you would know that whether prices start going to move out of the range. Let's take, do we have a range? Let's take this as a range. Pretty much, I wouldn't really call it an accurate range, but it's pretty much a range. At this stage, if you look at it, it's moving down, 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 down. It's only here that it starts moving up noticeably, crossing your ADX, your DMI lines. This is where, again, once again, based on indicators, it's a little lagging, but it tells you that your range-bound action is finished and prices move out of the range. It's starting to go into a trend. Yes, Ray, absolutely. See, any indicator. So what happens is I have seen a lot of traders use an innumerable amount of indicators. So on one chart, you have a MACD, you have an RSI, you have a stochastic, and you have 4 different moving averages, and you have the parabolic SAR with dots over there, in the sense that you can't see the price action. Now, my intention over here is, what I did was go over each indicator to show you that all indicators are lagging. It does, even in spite of using the indicators in the correct way, it still lags. So always, folks, always use your indicators in conjunction with price action, because price is king. It's price which tells you, and price gives you enough clues to tell you what it's going to do. Believe me, it tells you enough clues. It's up to you to take up those clues. Use the indicators, use them correctly. I hope that I have been able to at least educate some traders and make sense over here that use the indicators correctly, because a lot of traders just blindly use indicators, which is one of the main reasons why they lose. Believe me, this is one of the main reasons. Alright, folks, so that brings us to the end of this. I do hope that this was not too complicated. I wanted to keep this for the last because it's kind of a different indicator, but it would be worth if you understood how it works. And since this is recorded, you can go over it anytime and you can have a look. Alright, so I will meet you. Yes, through 1 moment. How to use the tool when ADX turned on? Just give me 1 moment. After overstretching and trend reversal, how do you use this to take the correct trade at the reversal? Dhruv, you do not take a trade at a reversal. When the ADX turns down, it means that your trend is finished. As I said, using the ADX is you should always tend to take a trade when the ADX is around the 20 area and it starts moving up. So using it as a timing indicator, remember, if your ADX has stretched, no value to it. But if you find that the ADX is stretched to the above part of your window, of whatever window that your computer shows, it means that your trend is stretched. It starts moving down, your trend is finishing. You do not get into a trend at that time. You only get into a trade when your ADX comes down to 20 and starts moving up. That's the whole purpose of using it. All right? Alright, folks, so that's it, and well, I hope you have a good trading week ahead. Today is just the first day of the week, and well, December coming up, we have maybe a couple of weeks more of trading, and then Merry Christmas and Happy New Year's to everybody. Alright, trading week, I'll probably see you with some other topic in the next webinar whenever we do that. All right, thank you, folks. Thank you all, and happy trading. Yes, you too, Alan. Thank you.